It's interesting. I've been telling people to co-invest with me in deals for the last 12 months. Some people have listened to me, some haven't. And those who haven't missed out big time, because if you saw the big press release that went all over the world on October 30th, I purchased Dressbarn, a company with 740 million revenue in the last 12 months. I'm taking it online, closing down 650 department stores, improving the economics on this business. And this is just the beginning. Dressbarn's a 57-year-old brand. In the next 18 months, you're gonna see massive brands potentially be up for sale. You've already seen in the past Sears, Toys R Us, American Apparel. It's just beginning. $1 trillion or more is going to change hands. I now have access, because of this big Dressbarn deal, to over 100 other distressed brands. Click the link below. You have to be an accredited investor, and let's talk.
What's up, guys? So I've been getting a lot of questions since I did the whole fake guru series. Hey, is this guy a fake guru? Is that guy a fraud? Or is this digital course a scam? And I've been particularly getting a lot of questions about Tai Lopez since he's the highest profile in the industry. And I originally said I wasn't going to do like a video on an individual, online business guru doing an expose or anything, because this is primarily a business and investing channel, some behavioral finance in there. So it's not meant for just roasting individual online business gurus. But what Tai Lopez is doing with his new venture, Tai Lopez Capital Group, which has morphed into retail e-commerce ventures, actually crosses into the world that I cover, which is, hedge funds, capital management. So in this video, I'm going to explain exactly what's going on here, and if I believe that investing in these new ventures is a good idea. I'll give you a hint. Probably not.
Dude, I have a lot of stories like that. That's why when people think I'm a scam, I'm like, dude, I wish I could show you all the people that come up to me with real stories like that.
I mean, I'm sure, I wouldn't call it a scam.
Yeah.
But I'm sure there's a lot of people who benefit from it, and I'm sure there's a lot of people who probably spend a bunch of money because they're desperate for anything and in a vulnerable place, and then just like move on to something else, right?
So is Tai Lopez a fake guru? Well, it's complicated. He does have an extensive entrepreneurial background that started after he dropped out of college. Here he began working at GE Capital for a couple years before co-founding a financial services firm with partners. He claims that they managed $100 million for over 6,000 clients. What happened after he left his partnership in 2007 is where things get a bit sketchy. He claims to have invested in real estate and nightclubs around this time, but I haven't found anything to confirm this. Instead, it would appear that Tai Lopez made the bulk of his wealth between 2010 and 2015 by running a fleet of scammy dating websites. And it's confirmed that several of these websites were doing millions in revenue.
He's also been a former guest on Bravo's The Millionaire Matchmaker, and he owns a network of niche dating sites, including EliteGlobalDating.com and Millionaire Meeting. MillionaireMeeting.com. He's written a book on the subject. It's called The Guru's Guide to Online Dating. You can find it on Amazon. Please welcome to the show, Mr. Tai Lopez.
The reason why he needed to run so many websites is because the bad reviews and chargebacks from people would ruin one business, so he would simply rinse and repeat with another one using the same fraudulent system. According to several reviews, this scheme involved getting people to sign up to the dating website for free. Then once signed up, they would get several matches and messages from very attractive people, but needed to pay for a premium membership to keep the conversation going. Once they paid, the matches and conversations would quickly dry up. People also found it very difficult to cancel their membership once they realized they've been scammed. From the money he made in the dating industry, he was able to launch a new career in the make money online self-help industry, rocketing into the spotlight with the viral "Here in My Garage" ad campaign.
Here in my garage, just bought this new Lamborghini here. It's fun to drive up here in the Hollywood Hills. But you know what I like a lot more than materialistic things? Knowledge.
Even after this multi-million-dollar YouTube ad campaign and becoming a walking meme, the shady business practices didn't stop. He launched the online education business MentorBox in 2016, which has also been plagued with bad reviews due to not honoring refund requests and recurring charges after the subscription had been canceled. Tai also got sued last year by another online business guru, Bo Crable, after he purchased a 55% stake in a newly formed business for over $1.2 million, but allegedly received nothing in return. This agreement was signed back in October 2019, and the lawsuit was filed a year later claiming fraud, breach of fiduciary duty, failure of a contract, and securities law violations. The lawsuit further states that Tai not only took his money, but also his expertise and then launched a competing business. If we use the strictest definition of the term, overall I actually do not think Tai Lopez is a fake business guru. I even know people who've gotten some value from his courses, particularly his social media marketing agency course, and for the most part his products are reasonably priced. What I would say is he has a long history of blurring the ethical lines and engaging in shady, deceptive business practices, if not outright fraud. He's definitely an experienced businessman, but from what I've seen, he seems to operate with a very Machiavellian mindset, meaning he'll do whatever benefits him. So if running a business ethically benefits him, he'll do it. But if it doesn't benefit him, he won't. Operating on pure self-interest rather than moral principles. Not all fake business gurus are the same. The smarter ones do something I call fake guru reputation laundering. Now, what does that mean? If you look at the typical fake guru, it's the same story. They're selling you get rich quick and easy. They're marketing it. It's grossly overpriced courses or masterminds or whatever. And that's pretty much all they know. They're like one-trick ponies. They keep going back to the same well of overpriced courses and other educational products. The problem with this is that it presents long-term issues and risks. 3 in particular. You have the legal risk. If you have a lot of angry customers, maybe you're not honoring the money back guarantee. And eventually you're going to have legal issues. Customers are going to sue, maybe class action lawsuits. So there's that. Then you also have the regulatory risks. The FTC might come after you if you're engaging in predatory marketing or, deceptive practices. Especially if you get pretty big, then the FTC will very likely come after you if a lot of people get defrauded. And then third is the reputational risk. Eventually, with enough bad reviews and enough people like me making videos about you, it's going to really hurt your reputation over time. So the smart gurus, they get in, they make their millions selling, a dream with overpriced courses, and then they get out, and preferably into something more legitimate and more lucrative. People have a short memory. If you're doing something more legitimate, over time, people are going to forget that you initially made all your money through, this get rich quick grift. And that's exactly what I believe Tai Lopez is doing with this new retail e-commerce ventures. And in this video, I'm going to show you just how that's being done. Before I answer whether or not retail e-commerce ventures is a good investment opportunity, we must first understand what actually is being done here. If you ask Tai, he'll try to sell you the dream that this approach to buying and restructuring failed businesses is completely unique, has a low risk profile, high returns, and no one has ever thought about this before. But the reality is this investment strategy is none of those things.
I don't think that what you're doing is novel. I think it's very smart. I think that it's like, as you said, you were losing out to all these other people. There's other people bidding for these businesses. It's not like you just found something that was never being done. There's vulture investors that all they do is this. This is a very common thing to take companies that are in bankruptcy, find the assets, try to find a new way to market the products, take the brand. It's not like a novel approach, okay? It's just, to me, what made it interesting was that it seemed to dovetail very well with your core competencies. That's what, to me, made it interesting. Not the approach itself is as old as finance is. Take fallen companies, take the brand equity, take the trust out of that, and just market it in a more intelligent way with less overhead. That's not a novel approach, Tai. What is novel, I thought, is that you were an expert at online marketing. I know Alex is a wizard, so I thought that was what made this interesting to me, at least. But it turns out you're saying that you don't even operate the companies.
As Jordan Belfort just said, this is classic vulture investing. You look at companies that are either in bankruptcy or on the verge of bankruptcy, put in a bid for the remaining assets you think have value, then restructure and reopen that business with their leftover assets and hopefully squeeze a profit out of them. There is no guarantee the strategy will be profitable. If you look at the more traditional venture capital funds, they anticipate most of their investments will fail. The only difference is they invest in startups with the potential to achieve exponential growth and a strong market position. If this happens, the investors will enjoy massive returns, many times thousands of % on their money, so the few winners more than make up for the losers. But Tai Lopez isn't investing in startups like a VC. Instead, he's trying to squeeze a bit of profit out of failed businesses. This investment strategy is called cigar butt investing.
I've been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And that I was taught that, we'll say in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. It's disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks. You really want to be in a wonderful business because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake.
You could believe that the only reason all these companies went out of business is because they were mismanaged and didn't focus enough on e-commerce, but I doubt it. I also seriously doubt companies like Pier 1, Radio Shack, and Dressbarn will somehow dominate the market going forward with e-commerce. Hell, maybe he can bring back Blockbuster and MySpace while he's at it. He could tell the story that just 12 years ago, Blockbuster had more revenue than Netflix, and MySpace had more unique visitors than Facebook. Guys, looking at a company's glory days from a decade ago, thinking there's something there to be salvaged is flawed logic.
Look at these brands like Radio Shack. 8,000 stores in America at its peak. Pier 1 Imports, when we bought it the previous year, it had done $1.7 billion in revenue. Hundreds of millions of e-com.
And turning a retailer into a strictly online operation is nothing new. Bankrupt companies like Circuit City still exist online, but you probably didn't know that. Why? Because even though Circuit City has a 72-year-old brand that's very recognizable and at its peak it was doing billions in revenue and had hundreds of store locations, nowadays no one gives a damn about them since they fundamentally failed to compete with the likes of Best Buy, Walmart, and of course Amazon. Even though they're now 100% e-commerce businesses, I doubt they're going to be doing numbers remotely close to their 1990s peak. So then why start a fund that invests in brands that were left for dead when the upside potential is so mediocre? 2 words: capital management. The reality is that managing large sums of capital is the most lucrative grift there is. A lot of the richest people in the world are hedge fund managers that got that way by convincing rich people, accredited investors, to give them their money because they're going to give them these amazing returns and then charging high management fees on that money. And the way it works is that the more you have under management, the more fees you could charge. The typical fee structure for a hedge fund on Wall Street is the 2 and 20. 2% of all assets under management you charge yearly, and 20% of any upside realized profits. And they also have very strict limitations on what you can take out. So if you don't like the performance, it's probably going to be a while before you could legally take your money out of the fund. I actually think that getting out of the get-rich-quick grift and into the large fund capital management grift and buying up these, cigar butt investments is a huge upgrade for time. But do I think it's smart to invest your money into, if you're an accredited investor, into retail e-commerce ventures?
Oh, hell no!
Honestly, I really don't have an issue with any of this, and I wish him the best. I hope he makes a lot of money with this, and I hope his investors make a lot of money. But personally, would I ever invest in this? Absolutely not. One, because I generally do not like the incentive structure of these capital management funds. For example, I co-own some businesses and I have business partners. Our incentive structure is aligned. If the company makes money, we make money. If the company loses money or goes bankrupt, we lose it all. We have a perfect aligned incentive structure. When I try to predict someone else's behavior, I have to look at what their incentive structure is. When it comes to these funds, the real incentive structure is to just get as much capital under management as possible and charge fees on it. If it makes money, great, you'll make even more money. If it doesn't make any money, you still make a bunch of money. If it loses money, you still make a bunch of money. So that whole incentive structure is not something I want to be a part of. And number two, which I just went over earlier, is Tai Lopez's shady past and sketchy ethical business practices, as well as limited business experience when it comes to this kind of vulture investing. Buying the assets of a failed business like Dressbarn doesn't automatically make you an expert in this industry. That would be like me saying that, hey, I bought a few stocks in the stock market, therefore I'm qualified to be a trader at Goldman Sachs. No, I need to have a track record of success. I can't just buy something and be like, all right, I'm an expert. Now, if I go to Goldman Sachs and I show, hey, I made, over the last decade, I made 30% every year internal rate of return from my stock trading, plus maybe I have some other more credentials or qualifications, then they might be interested in giving me an interview or something. But you have to have a track record of success to be considered as an authority or someone whose experience I should take seriously. At the end of the day, being an accredited investor, aka someone who's fairly wealthy, has money, that they could spend and engage in more riskier investment vehicles like what's being done here with retail e-commerce ventures, I personally have no problem with it. I don't have any issue with rich people risking their money in these dicier investment vehicles. If they make a ton of money, fantastic. If they lose a ton of money, great. I don't care. My main issue is when these grifts take advantage of, the poorer, more desperate, more gullible person. So at the end of the day, I think we can all breathe a sigh of relief that Tai Lopez is no longer marketing to the poorer, more desperate, more gullible customer, and instead targeting the gullible rich person. But anyway, that's my opinion, and thanks for watching. I'll see you on the next video. Peace.
I got one, I got me a bad one, fiery, like she is a dragon. My diamonds, ice, like Brick Squad 217. I'm rolling. Pass me the OG, low focus. I'm wavy like oceans. She drowning in potion. Girl, pass me the motion. Tryna hold it.